What's up, everybody? Hey, welcome to a new edition of Black Box Beat. We're here after the bell for you. Let's get it going on. I'm Kang.
I'm Maria.
And I'm Hells.
All right. So earnings continues, and we've got GameStop out. We're still waiting for some of the other ones to release. So we'll move earnings just in a little bit. So we'll continue. We will go over them. It'll just be in a little bit. But we've got a lot of headlines, a lot of earnings. So let's get right into it with chat room chatter. So what do we got, guys, with these headlines? Another one that I thought was interesting was Taylor Swift. We kind of talked about it in our room a little bit, where she's bypassed all the studios, and AMC is going to be playing her concerts in the theaters, and there are already like lines. Like she's already brought in a bunch of money, and they're expecting a bunch more to come in.
Yeah,
See,
I mean, I think it makes a lot of business sense to do that, especially when you've got her concerts that people are like going crazy. I mean, there's like national policy developed around these concerts, with like the Ticketmaster monopoly and all that stuff. So I mean, people are losing their mind to. I was just asking some of my family the other day. I don't know what the big draw is, but hey, to each their own. But anyway, it seems like she's got a cult, and you might as well milk it while the on the crest of the wave. So hey, you got to get more people in the door, sell more tickets. I think she had sold like $26 million in tickets already. So I'm all for it. It's capitalism at its best.
Yep. Yep. How's you awfully quiet over there?
Look, it's like I would lie if I said that I have not shaken it off in the past. I would lie if I said that I have not, if I have not done that. I would be lying if I said that, if that certain songs come on that I'll crank it up, and as I'm pulling up towards a stoplight, I'll turn the volume down and put the windows up to continue the little jam out. But look, Taylor, rock and roll, man. It's like every generation has one. I just hope that she continues being the great artist that she is, instead of kind of fizzling like maybe Britney did, or maybe Madonna kind of did in a lot of ways. Every generation has one. Hat tip to greatness. I mean, she's great. You can't deny that.
So did I just? I don't think we can sweep this under the rug. They say the longer time you spend around somebody, you learn more about them. So did out of all of this, did I just learn that that you would, if Shake It Off came on the radio, that you would be jamming out?
I'd be lying if I said that I haven't. I don't know if that is come and gone
Okay.
within my system, but I know that I have. I know I've shaken it off, and I know that there's a couple of songs that when they play and nobody's around, it's like I'm gonna crank that up. I'm gonna crank it up really, really loud, and I will deny it for the most. I'll even deny what I'm saying right now ever happened. Even if you show me the tape, I will deny that. But it's like she's got a little bit of music in there that works.
Learn something new every day. Learn something new every day.
What
I
do we
don't know
got
why
going
when
on
you
there
when
with
you
the
said no
Fed?
one's around, I could just picture you shaking it off with you got a boa or something going on there.
I
I
feel
don't
like you
know.
should make a TikTok.
Yeah,
Make a
you should.
TikTok
Yeah,
for us.
Well,
you should. Yeah.
we did talk. If Tesla does hit 500 this year, we will have some excellent entertainment. We did discuss that pre-market. So
I don't know. Excellent is subjective. Okay, that's very subjective word right there.
no, it really, really is. As far as the Fed, Maria, it's like this data continues to come in for the most part on balance to what they're looking for. What also is coming in more and more picture as far as delinquencies being up, as far as savings being depleted. If there's a lot of weight and a lot of stress sitting on the consumer by what the Fed's doing. The question is whether or not they're going to go for the jugular and slit everybody's throat, or if they're going to be like, okay, enough is enough. That's for as far as what the Fed is doing. We're going to find out next week. And a lot of this activity, I think today, even in light of the Apple news, I think a lot of it is just kind of setting the table for next week. And the question for me ultimately is the Fed for the American people, or do they hate the American people? And I think we'll find out soon enough next week.
I agree with you. I agree with you. I do agree. We have a little bit of data this week, but it's fairly light. And I think a lot of people are looking towards that Fed meeting just to kind of see what we get out of them.
But what a short-lived dip in like treasury yields. I mean, we were pushing 4.3, then we dipped all the way down. I mean, it's like these treasuries are trading like meme stocks. I mean, the volatility is crazy. And so you had like namely the 10-year got that sub 4, 0.1, never went below 4. And pretty much now, like today, we were back up at 4.3. I mean, it's just like, I don't know, this volatility in the treasury market is crazy. So you couple that with oil, almost at pretty much $90 a barrel. I mean, that, you know, doesn't look too good, at least in the short run for the consumer.
Agreed. And when was that? Was that yesterday that they said WTI hit 90 or something? It was the highest since November. Was that
Yeah,
yesterday that
like
that came out? Yeah.
yeah, I mean, right now it's at you got WTI at 87 and Brent at 90 and a half.
Yeah.
Yeah, but
Mm-hmm.
I think we have to go back to what the Fed's mission statement was at the very beginning when they started babbling about demand destruction. Um, they're getting their way. The consumer's getting destroyed. Profits continue to go to corporate America, so they're winning on that note. Um, yeah, it's great job, pal. Fed, excellent work. Hashtag winning.
And you got, I mean, and consumer debt is going crazy. Like, I mean, I don't know. It just, to me, it just looks like more people are, trying to make ends meet there, trying to cover the cost of some of these things with that, you know, with debt going up. And then, like, we're seeing this headline right here. You've got not huge amounts of delinquencies, but you've got delinquencies starting to tick up on both that and auto loans.
Yeah.
I just don't
So,
know what
could be
type of
interesting.
picture you can paint for the Fed going into this meeting that any type of a raise or hawkish sentiment overall is not good for America. I just don't know what signal they need to back off. It's like I don't know what else they need, and it's like this is we're getting to the point to where the foot is on the neck, the blade is on the neck, whatever you want to call it. It's like what are you going to do, pal? Are you a patriot? Are you an American? Are you going to pat yourself on the back and say we're going to go ahead and continue to pause and take more of a tone that at least is in line with 85% of Americans right now? They're kind of like, this sucks. Are you going to do that? Are you going to continue to beat them over the head and neck? Ultimately, it's him and it's the Fed. It's like it's them that decide this. So what's next?
I vote for a pause this time around. I think they'll pause.
That'd be great. That would be great. Although I was reading that the forecast, at least for November, they are now thinking there's a higher chance of a rate increase in November.
Hmm.
So we'll see. We'll see what happens this in the September meeting, and obviously in November we'll see what happens. Real quick, guys, let's get through some of these earnings. I think most of them are out. The first one we're going to cover is GameStop. So GameStop reported Q2 adjusted EPS minus 3 cents on a consensus of minus 14 cents. Q2 revenue 1.16 billion on a consensus of 1.14 billion. That is a beat and a beat for GameStop. They are currently up a little bit after hours, and I don't have guidance for them. The second one is Path, ticker PATH. They reported Q2 adjusted EPS 9 cents on a consensus of 3 cents, revenue 287.3 million, consensus 282.14 million. So that's also a beat and a beat for them for the reporting quarter. They see Q3 revenue 313 to 318 million on a consensus of 315.33, so kind of straddled. And they are raising full year revenue view to 1.273 to 1.278 billion from 1.267 to 1.272 billion. So slight raise on the full year guidance for Path, and Path is up just a little bit after hours. They kind of dipped slightly, and they reversed, and they are now green after hours. And then who do we have? We've got ChargePoint, ticker CHPT. They reported Q2 EPS minus 35 cents on a consensus of minus 15 cents. They reported Q2 revenue 150.5 million on a consensus of 153.2 million. That is a miss and a miss for ChargePoint for CHPT. They see Q3 revenue 150 to 165 million, consensus 181.6 million. So that's a guide down. And full year revenue, they are forecasting 605 to 630 million on a consensus of 674.9 million. So that's also It was a miss for the reporting quarter top and bottom lines. They are guiding down for the next quarter, and they are also guiding down full year. We've got just a couple more. I know a big one that people have been waiting for is AI. This has been a hot one. And AI reported Q1 EPS minus 9 cents on a consensus of minus 70, or I'm sorry, on a consensus of minus 17 cents. They reported Q1 revenue 72.4 million on a consensus of 71.6 million. That is a beat for the reporting quarter. They see Q2 revenue 72 to 76.5 million on a consensus of 73.8 million. So kind of straddling next quarter's revenue, and then full year they're looking at 295 to 320 million, consensus 308.2. So also straddling, and it looks like they're actually down a little bit after hours.
Yeah, that
They
doesn't
closed.
look too bad.
Yeah, I mean the earnings itself
Yeah.
isn't horrible. It's not impressive, and maybe they wanted more out of guidance and they wanted a bigger beat, but it's okay.
I guess I'm just always surprised that GameStop still makes money. It's like every time I take my son in there, there's like tumbleweeds blowing through the place.
Agreed. Then the last earnings we're going to go through is Dave and Buster's, ticker Play. They reported Q2 adjusted EPS 94 cents on a consensus of 93 cents. Q2 revenue 542.1 million on a consensus of 559 million. That is a miss on revenue. Comp store sales decreased 6.3%, and they are increasing their buyback program to 200 million. I don't have guidance for them. So those are our earnings for this afternoon. Um, Nothing super impressive, but we'll see what happens throughout. Maybe we'll get more information on earning on conference calls, and maybe there'll be some movement in those tomorrow.
Did Play offer any guidance? It's like
Not
that's
yet.
direct consumer.
I know, not yet.
Not yet.
Uh,
It's like I'm curious about that. It's like how hurt is a consumer if they're still willing to buy $30 pizza and play video games as adults in a place? It's
right.
like such a goofy business. It's like
And people
But
still wear American Eagle. Wow.
what they did say is, as we enter the second half of 2023, we remain as confident as ever in our ability to execute against the numerous and sizable growth initiatives that we laid out in our recent Investor Day presentation, and which we have already begun implementing. During the quarter, we are pleased that we continue to open new stores at highly attractive returns on invested capital, and we have diligently managed our cost structure and continue to expand our adjusted EBITDA margins. And that our exceptional team has done a phenomenal job navigating our highly profitable and resilient business model through a dynamic period in our economy against strong top line comparisons versus 2022. We are laser focused on optimizing our business and growing revenue. Um,
it's one
no
hell of a
specific
word
guidance
salad
yet.
over there.
Huh?
It's one hell of a word salad over there that says absolutely nothing. It's like
I
we're
know.
trying real hard. We're doing real good. We're not going to say anything understatement, but we're going to throw a bunch of words together that sound cool. You said nothing.
Exactly. Absolutely. You're right. You're absolutely right about that. Those are our earnings. Um, let's go to Shag Mary Kill. We love this part of the show, right? This is like
Yeah.
one of the best.
Oh, for me, it's Nvidia. Nvidia broke this 479 area last week. It was a very nice short off of that prior area of support that turned into resistance. So I think that this one can be tricky. I know it's all in the AI thing, but we did break 479. We got a nice move to the downside on it today, roughly down about 3% ish. So again, this one can be a little tricky again, given the whole mania and stuff that's been kind of sold through this one, the crack that's been sold through this one lately. But I would say though, I did like the technical break today, so I'm going to be watching this one to see if we get any further like follow through, especially if the narrative holds up. With September being a little weaker, I think that this one could be primed for a little bit of right sizing, but we'll see. So Nvidia is the one that I'm watching this week.
Yeah, I don't think I have a dog in this fight, this one in particular with Nvidia. But yeah, great identification, Kang.
Thank you, sir.
I like it too. Definitely from a technical standpoint, you can see that the downside definitely does look a little bit more attractive than upside. I would like to continue to watch it too, just for a little bit more confirmation. Maybe if we get some overall market momentum, or continue to get some overall market momentum. downside that could help push that down a little bit. That would make that a nice trade, really nice trade.
Woo, thank you.
My turn. It's Okta. So last week they bought Okta calls on Friday, actually. It was a decent amount into the September 29th 95 calls. And looking at the chart, there is definitely upside potential there. Currently, there's a little bit of resistance in the 87 to 90 ish area. But if we can get some momentum behind this one, I think it could work out well to the upside. Open interest OI looks good with them actually adding since Friday. If you look at that, those numbers are green. They're continuing to move up. We're currently about even on these contracts with a few more weeks left until expiration. So right now, this is a shag for me. I like it.
Yeah, chart looks better than it did last week. So,
Yeah, yes, it does.
very nice, very nice.
For sure. For sure.
All right.
Whose turn? It's Hell's turn.
It's my
Hmm.
turn. Still short Home Depot. This thing spiked on me. For
Oh.
reason, I think the hurricane had something to do with it, but it's starting to pull back in a little bit. I'm still short till October. If I can't get more of a move by the end of this week, I'll probably cut it and look to reposition. I do believe that the pressure that's being put on the consumer in the housing market is really making a mess. So until then, kind of based on what we were talking about earlier with the Fed setting the table, I'm going to try to scalp and be nimble and through this zone. Today's sell off, it could have been a lot worse, with Apple being down 3.5% off of the news coming out of China, which I don't think we mentioned, but that's a pretty big deal as far as the overall just weight that Apple has on the market and what happened. Um, you got to start looking, I think, in a lot of ways at how do you evaluate Apple moving forward with this kind of being a threat. And even still, with some of the other tickers that have Chinese exposure, it's like, what happens if they come out and say, you know what, you can't, drive a Tesla car if you're a government employee? Then what does that do? There's some stuff hanging out there, and I think it's a lot of gamesmanship at the end of the day. But we have to be very careful and how we kind of look at these things with exposure to China if they're willing to do these things. And this is, it pains me that you have a communist country that without firing a shot can literally just decapitate a market in a lot of ways, like they were able to do today with the shot that they put on Apple. You had trillions of dollars in market cap being lost, with that being one of the catalysts overall. Data was not to the point that we should have sold off. I think a lot of it had to do with the pressure on Apple and the overall weight that they have. So that's kind of how I'm looking at it. I'm disgusted by it. I don't like commies, anybody that knows me. And so whenever they take a shot at America, one of the greatest companies that's ever existed, it bothers me. So, yeah.
I understand. I get it. I'm with you.
I'm sure there's a little, retribution built in there for us, giving them shit about TikTok and uh Huawei and so on and so forth.
Yeah, gamesmanship. But we're America, damn it. And my feet are in the ground on it. It's like there was no tip for tat.
All
Well,
right.
let's move on. We've got viewer questions. Our first question is from Phil. I always mess up his last name, so I'm not going to mess it up. But Phil asks, in light of today's beige book readings of savings being depleted and consumers relying on debt, how can the Fed continue to raise rates with delinquencies on the rise and student loans coming due? Does the Fed hate America?
Oh God, here we go.
So here we go. Right here's the
Oh
question.
man.
I think it's a valid question. I think they're very valid points, but I also think that there's another side to it where there's a lot that has already been done that's put us in the situation that we're in. And my rebuttal question to you would be, does the Fed have any other recourse to prevent a major financial catastrophes at some point in the
They don't.
future? What are their other options? Are they at a point where it's kind of like they're backed into a corner and it is what it is. They got to do what they got to do, or are we just really trying to hurt people? And I think the answer is somewhere in the middle. To be honest, I think it's somewhere in the middle there. So that's my answer, which is not really a great answer, but that's what I think.
Yeah, Mari, it's like I see your point and what you're making, but it's like the cure cannot be worse than the disease. It's like if we're going back to their original statement that inflation was transitory, right? And we were supposed to
Right.
believe them then, and then we were supposed to believe them again when it came to the rising rates, and we're supposed to believe them again. And plus, they're getting data and everything moving in their direction. The fact that we can look back now and say savings are more depleted than they were pre-pandemic, delinquencies are higher than they were pre-pandemic, all these little factoids are coming out that we are saying that the problem was the money being issued during the pandemic, and yet all that money has been erased, and you're still wanting to beat down on the consumer was never really the problem, if you're being honest. It never was the problem, but you're exacting your tools on the most vulnerable. So the question is, do you hate America? Or which part of America do you hate? Let me change that. Which part of America do you hate? And I think it's becoming more and more evident as far as the part of America that they despise. And that's a majority of the citizens.
I'm just going to say that it's you have Congress who has spent all this money. You still have a whole bunch of money in terms of infrastructure that is still sitting in bank accounts. So a lot of COVID relief money was still sitting in accounts, and I think that a lot of that is what's buoyed this economy because. I think anyone who's been trading for a while, if you saw the Fed raise this aggressively, we should be, we would have been down way before now. So, again, though, but when you have Congress that has spent and has put as much money in the system as they did, the Fed, in my opinion, to go back to what Mario was saying earlier, is kind of backed in a corner. It's kind of damned if you do and you're damned if you don't. Now, did they get it wrong with transitory? They most certainly did. Did they keep rates too low for too long? They most certainly did. But, that's kind of neither here nor there because right now you're trying to fix the problem now. And so the only way that you can do it is with a blunt instrument. Now they've been doing it through some QT, so kind of take draining the bathtub, so to speak, for liquidity. But it's either, as I've stated many times before, it's either leave inflation as is and it's going to get out of control, and then that really will get bad for 300 plus millions of Americans, or you can raise rates. And again, it is a blunt instrument, I'll give you that, but it is meant to reduce demand and put a cap on demand. And so now I think now we're starting to see some of the delayed impacts of that with mortgage rates being so high. And it's literally, it's just they're kind of going by the book, but they don't really have any other recourse.
All right, let's go on to the next question from Ivy Flores. Ivy Flores asks, "What are your top 3 rules for trading?" And oh my goodness, there's so many rules for trading. Number one, don't be stubborn. Number two, if you don't see a setup, don't trade it. Number three, I'm trying to think. There's so many. There's not like I wish I had it like just fresh in my mind what my top 3 would be. Number three, your job is to manage risk. Make sure you're always managing risk first and foremost. Process over profit. If you do that, your profit will follow.
I think some of mine are going to intertwine with Maria's too. I would say don't discount the mental part of this. I firmly believe it's like 80% mental, 20% aptitude. So many people try to go study charts or flow or whatever. Don't overlook, the mental side of this. So that's number one. Number two would be, work on, like Mario was saying, work on developing a process. Pretty much once you develop a process and that comes with discipline, setups, whatever you're looking for, your money will follow. And number three, just be patient because it will take time. All too often I see people get frustrated because they're not making, millions overnight and stuff like that. But any trader who's been doing this for a long time tells you that it takes a while and it's a lot of trial and error. So just hang in there.
Yeah, I think the only individual that I've ever heard summarize everything completely in totality would be Kenny Rogers. It's like go back and listen to the song "The Gambler." It's like you got to know. You got to know when to hold them. Got to know when to fold them. It's like that. Everything that you need to know about trading is within that song. If there's one thing that I can say, and we touched on it last week, and I'll say it again, it's that word discipline, 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 discipline. beat that into your head. And after you do that, you put the gambler on loop and listen to it 375 times. And then you'll kind of get it a little bit. It's tough for all of us. We all violate our rules, every single one of us. So it's like, just because you have rules are only as good as whether or not you keep them and you respect them and you honor them. And that goes back to discipline at the end of the day. Yeah. I'm sure Pop's listening, hearing me say discipline multiple times, and he's like, all these years, all I wanted you to do is discipline. And now you talk about discipline. Yeah, sure.
Well, folks, we've made it here to the end of the show. Hey, we do have a special guest next week, so you do not want to miss it. Data
Yay!
Warrior will be with us, so make sure you join. That's going to be next Wednesday, so exactly a week from today, 10 minutes after the close. Be sure to like and subscribe our YouTube so that you get those notifications when we go live. So I don't know about y'all, I'm really looking forward to that. So
Me too. I am too. It'll be fun.
And my Beta is such a great dude, so smart, so awesome.
Yay!
For sure. So until next time, folks, hope y'all continue to have some good trading out there and stay green, everybody. Peace.
Bye, y'all.
So it's like, how is it that the people responsible for the mess are the ones that we're relying on to fix the mess when they help make the mess? It's like, that sounds really stupid. They don't do that in